Good morning, everyone. Can you all hear me okay? Great. Firstly, I extend a warm welcome to the much anticipated panel discussion, Where's the Alpha? Technology and Product in Retail Trading. Firstly, let me introduce myself. I'm Aeby, founder and CEO of FYNXT. We are a Singapore-based fintech. We help brokers and empower them to have the alpha in managing their clients, their IBs, their fund managers, and also the operations by providing a purpose-built low-code platform. Now, before we plunge into the discussion and allow the panelists, just to set the context right, if like me, if y'all are wondering what is alpha in this context, it's not the Greek word alpha and omega. In trading, it signifies the ability to outperform the market, to uncover opportunities that lead to a superior return. Think of it as an edge that allows the brokers or allows the traders to have their trading game apart. For example, a trading algorithm that beats the market irrespective and is said to have a high alpha. Now, especially as the market dynamics shift and client expectations evolve, the role of technology in retail trading is getting increasingly critical. Now, today we have joined a great group of panelists, each of whom brings a very different and diverse perspective and a wealth of knowledge. So without further ado, I'll allow them to introduce themselves and then dwell into the questions. Chris.
Hello, everybody. Thank you for having me on this panel. I hope everybody's enjoying the Finance Magnates London Summit. For those who doesn't know me, my name is Christoforos Theodoulou. I'm the head of global business at MetaQuotes. MetaQuotes, we specialize in trading platforms for financial institutions. We are working with brokers, with banks, with hedge funds, with asset managers, with exchanges, with exchange members, which they are serving millions of end users of traders using our flagship product, which is the MetaTrader 5 at the moment. So that's just a few things about me. I will pass to John.
Morning, everyone. John Murillo, Chief Dealing Officer at B2Broker. We are a technology and liquidity provider. We specialize in the liquidity space on multi-asset. And effectively, for the tech side of the business, we can create different types of business from A to Z.
Good morning, everyone. I'm Wassim, Khateeb, Chief Commercial Officer at FXCUBIC. Super happy to be at the FMLS again. We are a fintech company specialized in development of low latency software for bridging, aggregation, risk management, and reporting. Can tell you more information about the company if you join us at the lounge downstairs, and I'm very happy taking part of that very nice panel. Thank you.
Hello, my name is Vitaly. I'm SVP of Sales and Business Development at Devexperts. Devexperts provides trading platforms, exchange solutions, charting software, and AI software for brokers and exchanges.
Hello, everybody, and thank you very much. Looking forward to this panel discussion. Grateful to be here. I am founder and director of DGM Tech Solutions and also host of the Financial Frontiers podcast. At DGM Tech Solutions, we look after the technology that brokers need to provide their services to end clients in the market. So that's management of all the technologies that exist, all the most common technologies that exist that a broker needs to provide its services. So the likes of MetaTrader or FXCUBIC or whoever it is, my fellow panelists over here, I can promote their businesses and in an indirect way bring business to DGM Tech Solutions. Thank you very much for having me here and looking forward to having a discussion here.
Great. Thank you very much, panelists. I think collectively there's over 100 years of tech experience in the industry, so I'm really looking forward for the discussion. So for all the audience, fasten your seatbelts and get your questions ready towards the end. And collectively, let's explore where's the alpha in the ever-evolving retail trading space. Just some housekeeping rules. We'll try to keep all the answers in less than a minute, so there are a lot of questions which we can answer, I'm sure, enlighten the audience as well. So let's dive right into the first question. How can brokers use technology to improve their own risk management and operational efficiency? Maybe I'll point to Wassim and Chris. You can take a jab at it.
Sure, thank you very much. We'll try in less than a minute. So efficiency is a function of doing tasks in as good as possible in as short amount of time as possible. And that's exactly what technology does. If we take it for trading and retail trading more specifically, technology allows to calculate very large amount of data, to analyze very large amount of data in a short amount of times, and reduce the possibility of human errors in general. So by definition, that increases the efficiency. We take as an example a trade that comes in an extremely fast way, especially nowadays. Technology will allow to analyze that trade, the trading behavior of that specific client, and based on that, it will route the trades to different execution venues and manage the risk of the brokers accordingly. This is something that would not or very difficultly be achievable by human being alone without the technology.
Thanks, Wassim. Chris?
Yeah, so I would like to continue from where Wassim stopped about human being managing the risk. So yes, brokers, they need to be using automated trading systems to be able to manage their risk. And if we try and be a bit more specific, for an example, you are managing risk from all types of traders and from different strategies that they're using to trade with you. For an example, there are riskier traders which they are maybe using scalping strategies, scalping techniques, and you need to have a different rule set to be able to cope with those techniques. And if I want to be a bit more specific in our trading technology, which is the MetaTrader 5, which we offer to the brokers, each broker has the possibility to set up their own routing rules. Routing rules works like an auto-routing management system, where they define what the scalper is, how they want to handle that trade, if it's a risky trade, how they want to book that trade, whether they want to keep that trade in-house or execute it on an external party, or if they want to match that trade with another trader, and so on. So based on the terms and the conditions of the broker, they can customize how that trade needs to be processed on an ethical way, and to be fair for the trader and for the broker as well. And at the same time, if you have a trader that is using a different strategy, and this, again, is risky for you, maybe they are using a low latency arbitrage kind of strategy, and they are trying to send the flow towards your way. So again, in this scenario, with the routing system, you have the possibility to have different rule sets that will apply for that as well. And having this connected with your bridges, with your liquidity providers, or with third-party providers, which they provide also bridges, you can synchronize this and to make sure that you have the minimum possible latency to be less risky, and so on. With your...
Thanks, Wassim and Chris. Fantastic insights. I would say as leaders navigating the quest for alpha, recognizing the paramount role for risk management is critical. And especially, it's evident that technology no longer acts as an enabler, right? It's a differentiator for Bedrock from a strategic perspective. Now, in the recent industry survey, I think 80% of the brokers cited AI is going to be the biggest differentiator for brokers, both from an experience perspective as well as the value that they bring. And I don't think there can be a tech panel discussion now without having a question or two related to AI. Right, which brings me to the next question, slightly convoluted one or difficult one. What are the ethical implications of AI and ML in retail forex trading world, given the typecasting it has in the society, right? So I'll probably start with Dinos and Vitaly to give a jab, and maybe Wassim, you can take a jab at it at the end as well.
Thank you. Yeah. So when it comes to AI and what that technology actually, what it offers is. It's a really powerful tool, right, to use generally in terms of, whatever the scope is that you're trying to do. And in the scope of our discussion, when we talk about ethics, let's take a step back and look at our industry. And we're talking about brokers and traders. And there's this very fine line between B booking and A booking, and I want to bring that into the discussion, right, and how ethics can play a role. So we cannot ignore the fact that if a broker takes on the risk of a B book, take the B book trade, that their benefit is at the loss of the trader. While I do want to believe that our industry doesn't work on that level playing field, that there is a motive to provide effective technology for the benefit of the end trader as well, and then use AI as a tool to help empower both brokers and traders efficiently. So I think, when it comes to ethics, it all depends on, the motive behind the participant, right? And the same goes for traders. You could leverage off of the power of AI to manipulate and, let's say, manipulate the market and to the detriment of a broker. So it all lies in, the intent of the participant. And, when it comes to ethics, there's also different things. So AI at DGM, what we're doing, what we've actually started from the beginning of the year is we're dipping our toes, and we've actually gone quite hard on AI, and we've actually integrated all the endpoints, and in a beta version, we have our DGM AI agent, which is not live, but we're using it internally. And what that does is we want to take the scope of that trading platform administration and use AI to leverage, off of what we do as a service efficiently by the power of AI. And, I don't know if this is an ethics debate, but I've got a funny story. So in the development of our product, one of the questions we asked, because we connected all the AI endpoints, we said, tell me the swap. One of the developers said, tell me the swap value of a specific symbol. And I've got a screenshot of this, and this is a true story, right? So it responded, I'm sorry, I deleted that symbol. Please tell me what I can do now. So it was a really confusing response, and that opened up our scope into we got to be really careful about AI and how we do it. So our decision was anything that's risky, like delete functions, edit functions, whatever it is, block it or restrict it a lot. And just a funny story there. I think ethics is quite a broad discussion, but those are just some of the insights I have to share.
Well, thanks you. I think you touched on some really sensitive points as well, but I'll let Vitaly and Wassim take a jab.
Sure. Yeah, so I'll start a bit far from your question, but definitely will come to the answer. So some time ago, I started receiving very strange emails. Like they were written from the people I know and I communicated before. So the emails were very well written, right? But they were long. And sometimes it was not clear like what people wanted to say, because they were all starting with very polite introduction, and then they were ending with a very polite and good summary. But still, that was really like what that person wanted to say. And I call those people now ChatGPT guys, because obviously they stopped talking to me, they talked to ChatGPT, and then they let ChatGPT talk to me. Well, they save a lot of time probably writing a few lines like I used before, but they don't save my time. They don't, unfortunately, they don't think that I will spend more time to read the ChatGPT written email and understand what they wanted to say. So another example of the wrong usage of AI and language model is when we start putting the AI-based chatbot into our trading platform. Some of the questions were not taken by the chatbot itself, but they are forwarded to ChatGPT. And sometimes ChatGPT was understanding the question wrong and was literally saying something like you said, not deleting the symbol, but saying I can't give you a financial advice. For instance, when the client is just asking how the Bollinger Bands work, right? So ChatGPT is kind of a tool that you cannot test directly, right? So when you program some algorithm, even when you analyze the big data, you can test the algo, right? You cannot effectively test ChatGPT, you can teach it, right? So what we actually started doing, we put another layer of AI on top of the ChatGPT, and we teach our layer with ChatGPT. So in the end, we have all the questions related to our industry answered by our own layer. It doesn't go to the internet, it doesn't go to the ChatGPT database, and doesn't expose client questions to the internet. So I think that's very important for every broker. That's a great technology, but like a hammer or like an Excel, you can use it to improve your efficiency, but you can also use it improperly and break your business.
Thanks, Vitaly. Wassim?
Yes,
Quick one.
I agree with the points of my fellow panelists. I think AI ethics implications is a very broad subject. Won't make it very long. I just call for caution and regulation and proper use of it, not only on the specific trading industry, but in general, and that any implication should keep in mind the impact it will have on the workforce market, because that's also important. And yes, I want to save more time for the rest of the question. I'm just calling for cautions on regulation on AI in general.
Thanks, Wassim. Thanks for being conscious. I think collectively we all agree balancing innovation and ethics is non-negotiable, especially like with, you look at even the basic of things, a knife can be used to cut a tomato or it can be used to stab. So like every innovation that has happened in the past, AI is going to evolve, and balancing the ethics as well as innovation is going to be given. So let's navigate to the next question. How can brokers use technology to improve trading experience for their clients? Chris and
Yes.
John.
Brokers can improve the trading experience of their clients, first of all, by making available their offerings on any device, by having a platform available on the desktop, on the mobile, or on the web terminal, or without the need for any download, to make it accessible for any device. This is the first step. The second step is to be able to offer them the possibility to do the onboarding without any human interaction at all. For an example, to open an account, to upload their documents, to have the documents verified automatically without the need to have a KYC officer to check the documents. And as soon as this is done, to be able to deposit inside the platform and enter the markets, because many traders are looking to do this immediately. Other ways that can be done is also through the communication channels that you can have with your traders. For an example, there is brokers that are using their technology to communicate manually with their clients, but also, since you have all these technologies of AI, of ChatGPT, of different chatbots trained to do as such, you can have this also automated. In MetaTrader 5, we have some automation allowing you to communicate with your clients for any type of reason, to be done automatically, whether this is via push notification or through an email or through the means of the chat channel that we have built into our platforms as well. In addition to this, again, you can enhance the experience of your traders by also offering them tutorials. Inside the MetaTrader 5, we have built-in tutorials, and also we have like a way where they can see their progress, how they are progressing with their experience, and it's giving them ideas of what's next for them to try and to learn more about the platform and to try new things into trading. And for the brokers that are willing to go the extra mile and offer a more customized service for their clients, they can have like a custom program, like a subscription service, where inside the platform, for a fee, they can allow their trader to subscribe to something more exclusive, something more one-to-one to their clients. And again, this is something that we have available in MetaTrader 5 and can be enabled by any broker from their side without any extra additional fees from our end.
Fantastic. Thanks, Chris. I think personalization is what you're coming to. John, your take on it?
Yeah, so I think that what it comes down to is, in this particular question, the essence is servicing your client. And for that, you need to optimize your entire workflow. You need optimization of procedures so that the more automation you get to achieve, the more clients you can serve on a timely manner. So basically, I'm just expanding on what you just said, Chris. It's about servicing that client with tools that will benefit them in the long run. The longer that lifespan of the customer it is, the more profitability you most likely will achieve with your client base. So that's a differentiator, in my opinion. I mean, retail brokers now, more or less everyone offers the same. The key is service. The better you service your client, the more likely you will achieve your targets.
No, absolutely. I think you both touched on the spot on, I would say. User experience is not just a UI or UX. It's the true experience end to end, right from what communication happens, how you're servicing the customer. I was just reading a market research. Like 75% of the traders today prioritize an intuitive and enriching interface as well as the customer service that you just mentioned. So absolutely. Let's move on to the next question. Another AI one. How can brokers effectively leverage AI and machine learning to gain a competitive advantage in analyzing market trends and making informed trading decisions in particular? Vitaly and Wassim, maybe you can take a jab at it, and Dinos.
Yeah, well, I have quite straight answer to that question. So, following the idea that Chris explained in the beginning, so you need to put your traders into different groups and to route the orders using different methods. So some traders can be booked, some traders can be sent to price bridge or maybe to LP. Okay, it's clear, and every platform probably supports that now. We went to the next step where we, in our exposure monitor, where we show for the broker their risk, like what they take in-house, like what they book. We let AI to group traders not by a specific criteria that you normally use to group them, like you analyze their past performance or like their profitability or how often they trade. No, we just let the AI to group the traders with some different criteria that we don't even know and highlight that in the exposure monitor. So now you can see broker can see their risk, not just like plain overall the company or per user group that was created before, but per custom group that AI identifies for the broker. And sometimes we see really interesting results that we didn't even expect to see them.
Thanks, Vitaly.
I think Vitaly covered most of it already. I just want to insist on the distinction between AI and machine learning, because AI exists in our industry for some time now, and it's been used in various technology. We have it in FXCUBIC to analyze large amount of data. And the implications of machine learning so far are quite limited. And again, on this one, I'm calling for caution and I'm calling for regulations on how to use it. I don't want to repeat what Vitaly already said, just for repeating it.
Thank you, Wassim. Appreciate it. Dinos, any views on that?
Yeah, so I mean, it's from a risk perspective, right? The broker's risk. Is that the question? If I just what is the question?
More about analyzing the market trends.
Okay. So, you know, again, when it comes to a technology like AI, I think, you know, what a broker or anyone who's interested in leveraging the technology, you need to jump. You need to just jump in and start working on it and see, you know, what are the obstacles and, you know, how do you overcome them? And, you know, how can a broker take advantage of, you know, market analytics and whatever it is? The technology has got the capability to do immense things. It just needs the effort and the work to do it. So I think, like, you know, my fellow panelists, Vitaly at Devexperts, right? Yeah, 100%. So you started already. I mean, you know, that's a good place to you know, that is the only place to start. You just got to start and get in. And how does a broker take advantage of that is by, you know, just incorporating the power of AI. Start adding all of this data, this non-linear, you know, dynamic, real-time data that AI has the power to, you know, to do much better than, you know, legacy technologies.
No, absolutely. Thanks. I definitely feel harnessing AI is not just about staying current, but it is about setting trends. It is really a commitment to securing a coveted alpha position. Since the topic has alpha in it, I have to say that's the only way. If you're not going to adopt AI in your technology, in your customer experience, in your customer service, you definitely will be behind and not be the alpha that you're aiming to from a broker perspective, right? Excuse me. Another simpler question, I would say, how can brokers mitigate the risk of social trading and copy trading and a little bit on prop trading as well, if someone would like to dwell into? John and Vitaly?
So from our perspective, we have a very successful copy trading tool. And over the years, we've grown that business exponentially. The pattern that I see, it's a tremendous tool if used correctly. And it comes down, from our view, to credibility. If you're using copy trading and you have an actual master trader that those statistics are realistic, I think it's a phenomenal tool to attract new clients. Unfortunately, there are some practices out there where, you know, people are doing different things. The real value for anyone in the retail space is the length of that client with you. The longer, and I will always go back to, I have some of the biggest relationships for 10 years with clients, only because we look at the long term. If you focus on your long-term goals, the longer that client stays with you, the more value it brings as a retail broker. This is the key to using social trading. How do you mitigate other risk? Well, of course, it comes to another component. When you're doing copy trading, you're doing a lot of transactions, most likely. For example, you have a master trader that has 1,000 or 2,000 copiers, and they may send 2,000 transactions at once to their LP. The LPs don't know that you have 2,000 trades coming in. So if you communicate to your LP that your flow is copy trading, they can batch that trade. They can, you know, some of the audience here that are also in the liquidity space, it is vital you communicate what your business model is so that your LP can facilitate and accommodate that type of trading flow. Because imagine if a bank gets 20 small tickets, they don't know that until it happens. You may experience a great deal of rejection, and liquidity consumption becomes an important factor. So to optimize that experience, you got to make sure you mitigate the risk by communicating. This is obviously our take on this topic.
Thank you, John. Thanks. Vitaly, a quick one, and maybe on prop trading.
Yeah. Well, I would just add to what John said, that it may not be just a master trade from the copy trading system. It may be a signal, right? Like many independent traders receive, and they trade the same direction, right? So, yeah, LP definitely needs to be prepared for that kind of trade. Yeah. In addition, well, prop trading. This is like a hot topic. To me, it's like Uber, but in retail trading. So instead of like taking a taxi, you get someone's money and you drive them somewhere, right? But of course there is a rating system. So best performance have the highest rating, and it's the popularity grows. We have many, like more than 10 prop trading firms as customers of Devexperts platform, and I feel like more brokers would like to have this service in addition to their classic brokerage services. And that's not like a big step for a broker. Like you need to have a trading platform with paper money trading, right? And a dashboard where you can show performance and ratings for the users and leaderboard. That's it. So I definitely would suggest you to take a look at their industry if you're not yet there. And yeah, feels like a subscription model also works here as well. So people are ready to pay like some fixed fee just to participate in that very interesting experience. I mean, retail users.
Thanks, Vitaly. I think copy trading and social trading is a little close to my heart as well. I started my journey in this industry building one for one of the biggest brokers. Then all the risks and the challenges that we spoke about are the reason that their compliance did not allow to go forward because they are regulated and listed and stuff like that, right? So that's where the way we mitigated the risk for copy trading is the investors are doing copying because they do not know what to do with it. The traditional fund management that is there in the business, we made that into a social element. So we call it the social manager that allows the investors to just fund a fund manager as if they're copying, but have the flexibility to unfollow and invest the way a fund management, a social trading would actually work. So that mitigates the risk for copy trading. More than happy to dwell into the details if anybody is interested. Moving to the next question. I think we have another 10 minutes. We'll try to squeeze in maybe 2 or 3 questions and then open it up for the audience to ask any if they have, right? Okay, what are the most important factors that retail forex brokers should consider when choosing technology? Chris and maybe Dinos.
From my experience, from my personal experience, what retail brokers are looking, whether it's a startup or an existing one, when they're purchasing their trading platform, they are looking for a multi-asset trading platform that allows them to compete, to be able to compete in the market with the well-established players or with other market participants efficiently. And it's important that they have all the needed elements to be able to do so. For an example, to be able to offer all the terminals on all devices, to be able to have a solution that allows them to use algo trading for their clients, to be able to have a huge community of traders that they can work with. So by having a platform that can do all of this for them, I think allows them to compete with more and bigger brokers, and all of this at a very low total cost of ownership compared to if they were going to choose to develop their own or to go with a solution that is not the industry standard into what they want to do, for an example.
Thanks, Chris. That sums it up. Dinos?
Yeah, and just to extend on that, I mean, I agree with everything that Christoforos said there. And you know, when it comes to a broker, whether it's a startup or an established broker in choosing the technology, there are a lot of things to consider. One is that just is very loud for me, and what we do when I consult generally is make sure that the technology that is being used is tried and tested. It's you know, it's reliable. So reliability is a very big one, right? You need to make sure that the technology that you're going to introduce is not going to break at some point. That you're not a guinea pig, you know, in terms of the offering or whatever the technology has to offer. Yeah, and then, you know, it's just generally following, you know, fintech providers. You know, there are professionals in the industry, such as DGM Tech Solutions, who know the technologies we consult. We've worked with the most common platforms out there. We know, you know, what benefits the different models that exist. And, you know, reliability, scalability is important. Of course, all of this ties into understanding the end markets. You know, what product, what do you want to offer the market? What is your angle? And ensuring that you're delivering what, you know, you are out to deliver. You know, the expectation, matching that expectation, and getting the feedback, right? Listen to the feedback from your client base, and you know, proper due diligence. Be wary. So, you know, the standard stuff.
Thanks, Dinos. I agree. I think it's not just about the functionality; it's also about the adaptability and the scalability of the technology that is selected. Mostly when there are so many varied vendors that are there that has to make a broker together, the integration capabilities play a much bigger role than what people initially anticipate when they start the broker. And obviously, more important, I would say, is future-proofing themselves. Because if they select a technology that is good now, but as a vendor does not have an intent or a vision to be innovative, then it becomes counterintuitive. If you really want to be the alpha in the industry, then you have to sign up with a vendor and not be penny-wise, pound-foolish when you select your technology, right? OK, maybe a couple of more questions, and then I'll open it up to the audience, yeah? How can technology help identify market inefficiencies and pricing anomalies for retail traders to exploit? Wassim, maybe yourself and Dinos.
Sure, thank you. So price anomalies is one of the worst nightmares that can face a broker, and a very important point. It relies, first of all, on the source of pricing. So on that, we advise to have diversified on multiple sources of pricing. At least 3 or 4 sources of pricing would be good. Then to make sure that the infrastructure, the servers, the hosting, and everything is treated properly and as close to the source of pricing as possible. And then to have the right pricing engine. And by right pricing engine, I mean having an engine that allows to filter idle symbols, for example. Idle symbols being filtered based on their liquidity and based on the market volatility, having different criteria to take them out if the symbol stays idle longer than a certain period of time. or having a direct comparison between a price coming from one certain liquidity providers and the average of the pool of liquidity provider, because that's an indication of the health, how healthy that price is. So a combination of multiple sources, proper infrastructure, and proper pricing engine being able to filter wrong pricing in order not to feed it to the platform, because that can affect the broker reputation, and it can affect also the broker profitability on both models, by the way, as much as on A-book than on B-book, because also on market making model, you don't want to be market making on the wrong price. That's the worst thing that a broker can face.
Oh, lovely. Thanks, Wassim, on that insight. Dinos, a quick one, given that you work with a lot of the vendors.
Yeah, that's exactly right. You know, there are technologies like FXCUBIC, where they give, you know, these filtration options, you know, just configuring the platform, having, you know, from a broker standpoint, you need to have the skill set and the knowledge to do all of this stuff, right? And this question about pricing anomalies comes in, you know, filtration. You know, that's a good source. Obviously, that is a given. You know, you need to have good liquidity providers that are reliable again, and then once you have those in place, just that flow, the quotes and the way they flow in every point where you're able to add these filtrations and, you know, ignore price anomalies, have those correct filters in place so that the end client is receiving a quote that is correct to a point. And then what I'd also advise is, you know, again, these technologies that cross-check and make sure that, you know, the price that has come in agrees with the average of, you know, what's generally in the market. And then, you know, do also a historical check on that. You know, how's my pricing been compared to, you know, what the market has been at. And, you know, the technologies that exist already do a good job in mitigating that pain point.
Thanks. So technology is essentially a lens for the market dynamics, I would say. One last question, then I'll just open it up for questions from the audience, yeah? What are the most significant technology investments your firm is making to enhance the retail trading alpha? Maybe everyone just take a jab for 30 seconds each and we'll be on time. Chris, I'll start with you.
So from our side, we are releasing regular updates, mostly on a bi-weekly basis, improving our trading platforms, the MetaTrader 5, making it more efficient, releasing new features, making it faster, allowing traders to utilize it even better. We are adding a lot of features for the brokers to service their traders. We made updates on our web terminal with a better market watch, changes in our charting to able to show the entry and the exit points of the trades. We have introduced the payments now in our trading platform, allowing the traders to be able to deposit and withdraw straight within the trading terminal. And all the aspects of that platform are being updated, are being improved, and showing how future-proof the platform it is.
Thank you. That's 30 seconds. John.
I'll keep it brief. So, from our perspective, we are firm believers in continuing to develop our solutions. It's a non-stop approach we've undertaken since day one. So we believe that if you continue to invest in your tech, utilizing some of the best practices in the business, especially in the developing world, making it our technology way more scalable is the way forward. So we invest tremendously on infrastructure, and some of the most sophisticated one within the business to continue our growth path. Effectively, it comes down nowadays to competition. Unless you continue to evolve and improve your product, you will not be able to survive in the industry.
Yeah. Well, absolutely. Great. Wassim?
Yes, just like John said, continuity is the key word here. We continue to do things as they are. We hear carefully feedbacks from our clients. We observe market trends, and we keep investing in our technologies to adapt it to these market trends and these client feedbacks and providing state-of-the-art solutions.
Thank you.
Well, we invested into three big things recently. One is open architecture. So we have a stable REST API that we offer to any partner, like copy trading, prop trading, external front-end, back-end risk system. So we allow different vendors to connect to our platform. and brokers can choose that. Second is user interface and usability. So we want users to not learn the platform, just use it when they see it for the first time. And the third one is scaling. So we managed to install the platform into multiple exclusive environments of different brokers in minutes, with a single click of a button.
Thank you. Vitaly, Dinos.
Thank you.
One.
I've got 1 second, but I'll I'll steal some time. So, yeah, again, following the same kind of sentiment over here, we focus very specifically on that niche is providing platform administration on, generally the technologies that brokers use. And we put a lot of attention and effort on R&D. And we want to take that specific, very niche service and flip it on its head, and be the best. I don't look at competition. The only competition is myself and the DGM. So as long as DGM is better than the day it was the day before yesterday, and we're improving that, that's the only competition. And we've put a lot of drive and effort into this DGM AI agent and an analytics tool, right? So, in short, happy to discuss.
Fantastic, thanks. I think continuity is the key word, I would say. Quick one, I know we're running out of time. Any questions? One question. I know everyone's staring at me, but from the back. Okay. I would say no, but so ladies and gentlemen, thank you so much for your time, and thank you, panelists, for your insightful discussions. I will leave you with the resonating theme that is echoed, I would say, as part of throughout the discussion. In the pursuit of alpha, technology is not just an enabler, it is a differentiator. It's an embodiment of commitment to excellence. Right? Thank you very much, ladies and gentlemen. Looking forward.
Thank you.
Thank you.